Hello, this is Tom Cloud with this bi-weekly precious metals market update. All the questions that we've had in the last 2 weeks since I recorded the last one have been, where do I think gold's going? Do I think the government's going to confiscate 401ks? Are they going to monitor your bank accounts? Where do you put your money? How do you divide it up? I mean, we probably have had seriously over 30 or 40. On a normal week, I get about 5 questions when I do these things. It was at least 25 and probably 35 comments, questions. People are just uncertain. We live in uncertain times. And as I record this is January 20th, 2021. A new president takes office today. So let's fire right into these questions. And this week, they're all about investments. They're all about where you put your money. What does it mean? I get all the time saying, well, you've been in economics all your life, all your career. I haven't. I don't understand that. I did something else for a living. So let's start the basic thing. First question that comes in is they want to know what the difference is in money markets. They said their broker told them one money market paid one amount, another money market paid another amount. And neither one of them are very much. But one of them, of course, is commercial paper, and one of them is treasury bill money markets. So all it gets down to is if you give them, if you're not in stocks, you've moved to the sidelines, and you put it in money markets, it's either in a commercial paper money market or a U.S. Treasury money market, and the U.S. Treasury money market is going to pay less. So if you go to commercial paper, these are loans to people like airlines and big corporations that have good credit, but they're willing to pay more than the government is because their full faith is behind it, but their full faith is not as big as the full faith of the U.S. government. So when you do move money to the sidelines, trying to figure out what you're going to do, where you're going to put it, I would say put it in treasury bills. Now, I'm not big on the government's way they manage money. They're probably the worst money managers in the history of the world when you really look at it seriously. But on the other hand, they'll print more to pay you, so you know you're going to get it. May not be worth much, but you're going to get some kind of paper, money market. So hopefully that covers that. The next, number 2 on the list is what I think about rates on these. People, we have been in a 15-year bull market in bonds and real estate mortgages. And we have watched interest rates go down, 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 and bonds and mortgage rates go down on the yield. But now we're in trouble. The way we're borrowing money and printing money, you can't do it anymore. The 30-year Treasury 2 weeks ago when I did this show was 0.83, under 1%. The government pay you to give their money to them for 30 years. Now it's like 1.3. It's been a 30% increase in 2 weeks in interest rates on 30-year Treasuries. We've seen mortgage rates jump for the last 2 weeks for the biggest jump in 15 years. Interest rates are going up. We're printing too much money. We're putting in piling worthless paper money with nothing to back it except the U.S. government, which is losing status around the world every day. So yes, you got to realize if you're in bonds for safety, it's easier to be better to be in treasury bills, in my opinion. You may make 1%. It's not going to be like bonds that are going to go down every time interest rates take a jump up. The value of the bond goes down. Now you may say back to me, I'm going to hold that bond to maturity. And you can hold that bond to maturity. But by the time you get the face value of it, it's been depreciated a lot. So I can't in my right mind tell you to buy a government bond when I wouldn't buy one myself. And I'm sure not going to stay in the ones I got. I've moved out of most of them. I've got a little bit left, but plenty of time to get out. Number 3, stimulus. Oh my gosh, where do we go from here? Here we're talking about giving a $10 $1,000 discount off of student loans to every person that has a student loan over $10,000. People, you and I paid for it. This is going to devalue what we've worked our rear ends off for our whole career, especially my age group, the baby boomers that were born from 1946 up to 1955. That 10-year window, we've worked, and now they want us to pay off student debts. Whether you like it or dislike it, it's expensive. That everybody will agree on. And that's what I'm talking about, is the cost of this. So if you've got a stimulus package coming, they've already sent out $600. Now they're talking about $1,400 more, taking $10,000 off of every student loan out there. And they don't even have a budget anymore. We're just running budget deficits like you can't comprehend. I've asked you many times to go to usdebtclock.org. And I'll ask you again, please go to usdebtclock.org and spend about 30 minutes to figure out where your family stands, where you stand. And at the end of it, go all the way to the bottom right-hand corner and look where gold and silver should be based on the amount of money created. So stimulus may have to happen to keep the economy from falling off the wall by just printing trillions of dollars. But let me give you an example that was given to me by a client yesterday morning. This is mind-boggling. When Jimmy Carter, in 1980, his last year in office, the deficit that we had was 30% of the gross domestic product. Today, I just looked at it this morning, it's 130%. The debt is 130% of the gross domestic product, unheard of in the history of the world. How long are people going to buy our debt? I can tell you one thing, we're about to hit 28 trillion. 28 trillion. At only a 2% average for interest borrowed is $560 billion a year in interest. Remember what I said about 1980? It was $500 billion a year to run the whole government. Now it's $560 billion just to pay the interest on the debt, and we're rolling it over, and now the rates are going higher. We're going to be at $1 trillion in interest literally by the next 4 years. It's mind-boggling to think of it. And yet we're going to see stimulus after stimulus after stimulus coming in the name of COVID. And yes, COVID is here. We're not going to recover. If you think that we're going to go back to 2019, you're kidding yourself. New strands of COVID are going to keep coming out. It's going to keep spreading. Maybe it's not as severe with this one as the next one, or more severe with the next one than it was with the last one. But just think of the trillions of dollars that have been lost with businesses closing down, people getting sick, they can't go back to work, they lost their jobs. We can't keep paying people. When are the riots going to start? When the money stops, the riots stop. People, you've got to think about it. God has given you a mandate to be a good steward. And you've got to take your own definition of that on who you're going to give money to, who you're going to help, how you're going to manage your money, what are you going to do with it. That is your responsibility. It's not mine to tell you what to do. I can help you a little bit by giving you foods of thought. But you've got to make your own decision on this stimulus. Because let me tell you, if you think this economy is going back to near where it was in 2019, anytime in the near future, or even for quite a few years, you're making a bad mistake. It's not going to happen. I had a client tell me 2 weeks ago, lived in New York. He was so thankful his lease was coming up, and the real estate market was so strong in New York, this a few months ago, that he was about to pay X amount a square foot. Now he just signed a 3-year lease, 60% cheaper. Real estate's falling all over the place. As interest rates go up and people lose their jobs, businesses quit, businesses go out of business, real estate is going to go down, down, down. Now, you look and say, yeah, the first year of COVID, it went up, up, up. People wanted gated communities. They wanted to be near the ocean. They wanted to be on lake property. They wanted to be in mountain property. They wanted gated property. All that has had a tremendous 12 months since it started. But the piper ends at the point all these other places like New York and like Los Angeles and like Chicago, I mean, they're never going to come back. But the saddest one yet was a guy in Michigan. I will leave it there. He got a letter in October that his pension was being cut by 28%, his pension. Then I started doing a little research, looking at pension plans of police departments, service people that retired from governments, local governments, state governments, federal governments. Everybody's pension's going down. All the money that's in these huge accounts to pay people's pensions for years is coming down. What's going to happen when the stock market has one big downturn and the trillions of dollars are wiped out? These people getting pensions is going to be cut. And I'm in that baby boomer group, born 1946 to 1955. Are all my people going to go back to work? People my age? No, they can't find a job. They get cut. So what happens then? You have a contraction in spending. Contraction in spending leads to a recession. 2 quarters or more leads to a depression. So yes, the word is there. The R word is there for sure. And the D word, depression, is there as a strong possibility. I'm not going to say it's inevitable, as long as we're printing this money. But people, we're getting in worse shape every day. The Japanese and the Chinese now own over 7 trillion of our 28 trillion. The day they want to crash it, they can crash it. They can put all that in there, and the U.S. government, to get 7 trillion replaced, would have to pay a large interest rate compared to where the market is right now. So I can tell you, you better be doing your homework in every minute, because the decisions you make in 2021 are going to be what you're going to be doing for the next 3 or 4 years as this new party comes through, and we're going to see things we've never seen before, bad and good. But you are a steward of your money. You've got to take full responsibility. And then we talk about, we're going to get into the dollar, which I've always told you is the most important. And right now, as I talk to you, we've seen it go from 123 a little over a year ago down to 90. And I've told you all along, 90, when the U.S. dollar index goes below 90, every 1% it goes down, gold is going to go up about 4%. And it's sitting on 90.32 today, the day that Joe Biden gets inaugurated. It stands at 90.32. It's going to 72. I wish I could guarantee you. I can't guarantee you. But I'm telling you what I think. And when it goes down another 18% times 4, it's about 75, 80% gold's going to go up. It's probably going to go up more than that, but that's a safe amount. Follow the dollar value every day. Look it up. And as it goes further below 90, you had better start adjusting your investments. Because as that dollar goes down, real things, gold, silver, real things, real value, platinum is going to be going up like it has been. I mentioned 2 weeks ago, year 2020, gold up 25.6%, silver 47%, platinum 13%, stock market 6.8% on the Dow. So you want to get in there. Gold's down about 1.5% this year, first 2 weeks of the year. Get in, because I'm not going to go into what's going on, but let me tell you, that's getting ready to change. Gold's getting ready to go up significantly, in my opinion, and silver. So you've got to get your position on the gold and silver. All this other stuff is all part of your financial plan. It's all part of dividing your wealth 7 or 8 ways, 5 ways, 4 ways, and getting ready to hunker down to what's going to be a different lifestyle in a different world than we've lived in our lifetime. So you've got to get ready for it, but keep the dollar. And we've talked about interest rates on debt, 28 trillion. I've talked about the Jimmy Carter thing to you. The last note on here, we've already talked about, except the one that scares me about as much as any of them, and it's the silent killer. And it is what the Chinese are doing, buying up farms in the breadbasket of America. Absolutely makes me sick. We have farmers in Kentucky. We have them in Kansas. We have them in Nebraska. And I've talked to 3 big farmers, and they tell me that 5 years from now, the real estate landscape of the farming in the United States is going to change, and it's not for the good. These are families that have been in farming for decades and decades and decades, throwing the towel in, and sometimes they don't even know they're selling to Chinese. They don't know until months later that the people that bought it were buying it for the Chinese. So this is one of the most serious problems in my view, and we're not even talking about it yet. Not just farmland. That's the one that worries me the worst. But other properties they're going to be buying up. Because remember, we have 330 million people in this country. They have 1.5 billion in theirs, 5 times bigger than we are. They've got a breadbasket. They've got to feed a lot more people for a long time. And they're going to have the money and the property to do it. So just think about some of the things we've talked about today. And I've been through all of them, so I want to make sure I didn't miss anything. I really appreciate the questions and people writing in, and we really do appreciate it. We hope we're helping you some, if not opening your eyes to what's going on in this crazy world out there. But once again, in closing, follow the usdebtclock.org. Please look at it like that. Please realize that you're a steward of what God's given you, and try to be a good steward. All this stuff may look like Greek to you because that's not your thing. But get your counselors. We're told in the Bible to use several counselors and to seek them. I'm here to give you what help I can give you through these things that we do every other week. But ultimately, you're responsible. But get ready to hunker down and watch the value of the dollar. That's the most important one of all that. And then watch the debt grow, watch the interest on the debt grow, and keep your ears open to what the Chinese are doing. Lastly, if you don't have your precious metals in an IRA, or one last thing, this morning I got a call, wanted to know if I'd heard that all 401ks are going to be confiscated. And I said, no, I haven't heard that. But they said that they were going to move it to treasuries because with this debt, they can't get other people to buy our debt, and interest rates are going up. So they're going to not confiscate your 401ks, but put them in position where you've got to invest in treasury bills. Once again, I have not heard that, but that was a question I got this morning. But what I can say to you for baby boomers that are in a 401k and don't have to be because they retired or whatever, get your money out of that 401k, get you 2 self-directed IRAs, one for stocks, bonds, and cash, and one for precious metals. Call us at 800-247-2812, and we'll help you, if you don't help you do that, to get you 2 separate accounts, how to set up, and we can be your broker and your agent on setting that up for you. So if you haven't done that, do it. And once again, you can reach us at 800-247-2812 and talk to Dan or Jade or myself. With this bi-weekly Precious Metals Market Update, this is Tom Cloud signing out.